a lot of people have been talking about its acquisition of Figma. It's actually sold off significantly since that was announced. Let me show you. That's actually when the announcement happened. It's down 22%, which is it basically lost 40 billion in market cap, even though the acquisition would only be around $20 billion in size. So even if Figma turns out to be like a whole scam, it's not. But just like even if it is a whole scam, the drop in value actually is larger than the maximum amount of value they could lose. What investors are concerned about and why they're selling off that much is basically that the fact that Adobe would want to buy Figma for $20 billion, despite the fact that it was valued at $10 billion. I'll show you real quick. $10 billion about the future, what's happening in creativity, and he just went on and he told he makes a great point though that they would integrate really well into Adobe's Creative Cloud, as Adobe does have basically the exact same product but worse. In Adobe XD, Figma is just a better version of that. It's growing rapidly. It also operates a freemium model and has a lot of developers, so they could target that audience to that 400 million people and try to incorporate them into the Adobe ecosystem basically. Uh, so some points on Adobe is that you can here I'll go to its I'll zoom in so you can see that is its investment detail. That's just it's consistently expanded its operating margin 26 to 36. That drop was when they changed it to change their model from a licensing model to a subscription model. And a temporary drop, but eventually revenue growth accelerated. It was a great move by management, honestly. It was probably they were probably one of the first companies that big with around 4 billion in revenue to actually make that change. And yeah. Uh Another thing that I like about Adobe is that from the start, like from 2012, 2014, it's consistently reduced its share count, generating around 1-2% per year value to shareholders. This will be temporarily offset most of these years because of the acquisition with Figma, but I do I won't question management on that. They have their reasons, and I do think that Figma is a great product. And while the valuation is steep, it's not completely unjustified. Uh, its ROE has gone up to 35%, which is a great ROE. I'll show you analyst forecasts. Solid growth. Not as solid as previous years, but still solid. EPS growth, top line growth looking better. Their current ratio is 1.14. That doesn't account for the fact that their free cash flow margin is uh 42%. So they could easily pay for their debt. Their total debt 4.6 billion. Total free cash flow. What's total free cash flow? 7 billion. So they could pay their debt with free cash flow in less than a year. Uh, and they do also have how much? 6 billion in cash. So their cash actually even offsets their debt. As you can see, their total cash positive, their net cash positive. Uh, and Adobe's balance sheet is sound. Uh, so some factors that you can mention that might hold people from buying Adobe, just other than the Figma acquisition, is that their growth is slowing as the model transition to a SaaS model is like that growth, that turbulence that they received is slowing down. Even though it was at 44% last year, the acquisition with Figma and also worsening macro conditions will impact that. So basically, here I got fair value 335, implying that's around close to 20% undervalued. However, the discount rate is 13%, which is a 9% equity risk premium with treasury yields at 4% now. Uh, Most people for a company like Adobe would use a weighted average cost of capital of like 6.5. So that is a high equity risk premium. And anyways, this is if I change this to like 10.5, which is 6.5 would imply 563, which would make it almost like which would make it 45% undervalued around that range. And for a company like Adobe, I 20% margin is enough for me to buy. So uh, you can also say that there are higher growth segments like the Adobe document, like Adobe Sign, do have more competition than the close to a monopoly that they experience with their Creative Cloud. For example, you got DocuSign, who's the leader, and Adobe's actually the runner-up. Uh, and they they're also their most recent segment, the digital experience segment. I do use Adobe myself. It really is a great product, and it does have a wide moat. Even though some people have been questioning it with the Figma acquisition, but acquisitions have always been part of their strategy. Currently, digital media represents around 75% of the revenue, and digital media, to be more specific, contains the Creative Cloud and Document Cloud. Uh, and the other segment that they have was the digital experience, as I mentioned before. So yeah, basically in the digital experience segment, they don't have a first mover advantage. They got Neolane for 600 million, Two Mogul for 629 million, Magento for 1.8 billion, Marketo for 4.8 billion, and yeah. So basically, the digital experience market is a big market with actually a 110 billion market size defined by Morningstar. And their non-GAAP operating margins are at 46%. I'll just show you their last quarter earnings. So their revenue grew 13% year over year, which is 50%, 15% in constant currency. It's close from what I modeled for the next 5 years. Uh, their cash flow from operations is 1.7 billion. That'd be 6.8 billion full year. 7.58, but that's probably just a weaker quarter. Usually companies would have a slightly stronger fourth quarter and first quarter. That's more for enterprises, but for companies with enterprise customers. But Adobe does have some enterprise customers in terms of uh, yeah. So their digital media segment, their biggest one, Creative Cloud and Document Cloud, are all up. Document Cloud's up 25%, constant currency, 14% for Creative Cloud. Their digital media, the digital experience, my bad, was up 14%, 15%. Uh, they actually, yeah. So basically, what's impacting them right now is just macro. Uh, just basically what every company's impacted by. Typical year-end seasonal strength demand and for our offerings, just what I was talking about, fourth quarter would usually is stronger. Foreign exchange headwinds. That's why right now I'm just looking at constant currency, not their revenue growth, not just their GAAP revenue growth. And this one just to show you a bit more about uh, their strategy, I guess. So they do have an e-commerce segment in their digital experience segment. So they are in these high growth segments that you don't really see Adobe in. Document workflow automation, that'd be Atlassian team at maybe ServiceNow at the win. AI, uh, they basically don't give a definitive answer, but I would say they would phase out Adobe XD once Figma gets incorporated into Adobe and into its offerings. Uh, Getting reduced each year. I'll show you how much they reduced so far this year. 2.5%. Long term, Adobe's products are core to a lot of graphic designers, digital professionals. They don't have a lot of liabilities. They really don't have a lot of concrete competition in their main business. Uh, the only competition that there's they have been incredibly disciplined with their capital throughout since its incorporation as a company. They've always managed and delivered value to shareholders, as you can see with their ROIC. Where's their ROIC? 100%. That might be yeah. I'm not sure if that's, but yeah. Uh, they do generate a lot of profits per employee. Uh, their price to free cash flow is only 18 right now. Forward P is 18. It's the forward free cash flow. Anyways, their P historically has been around the 40s and 50s. Sometimes that was probably temporary because of the transition to SaaS, but usually it's around 40, 50. So it really has been a steep decline considering its forward P actually would be 18. As you can see with its on the earnings growth 37%. So yeah, Adobe just seems like a solid buy to me. It's a great company. It's going to deliver value on the long term, and it's undervalued right now, even by traditional metrics. 18%, a PE of 18. My bad. You see that Walmart's probably at 20 something. I am Walmart's here. Walmart statistics PE 26, forward 20. You think Walmart with a growth rate of 4%, lower margins, 24%, deserves a higher PE than Adobe? No, it doesn't. Lower growth, even lower top line growth, even though that is pretty good. Lower top line growth. Uh, they're more leveraged, I think. Yeah, their net cash is negative 42 billion. The only reason why it's just because people are just selling tech with no reason. They're just buying more defensive companies. That's actually what Morningstar thinks. Let's just go to fair value 500. Yeah. So thanks for watching Maximal Profit.